Hello everybody and welcome to another amazing video of DIY investing. I have such an important breakdown going over each and every one of our long-term charts and indexes, talking about Bitcoin, talking about the long-term of altcoins, and why I believe that this is 100% the institutional cycle and the most important cycle that we can be positioned for going over the next couple years. I believe the most amount of profit we're ever going to see inside of our lifetimes is going to be made inside of this crypto bull run, and anybody positioned inside of the right projects and has an understanding of the long-term projection is going to be able to realize that fortune just like I've done for myself. When I look at all the people that watch this channel, it makes me truly excited because what I'm seeing inside of the charts are telling me that this one is going to be the most life-changing bull run we've ever experienced, and it's all the people that watch this channel that are about to make a significant amount of profit over the next couple years. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, here we are to kick off today's video, and I wanted to start out by talking to you guys about this index right here, and it's more or less a moving average that shows the risk inside of Bitcoin and the average risk going over each one of our cycles. And I think it's very important that we're comparing this and kind of seeing what we're looking at going into our next bull run, because I've talked a lot about why we want to see this cycle be building a lot more of a consistent area of support, build a foundation, show a lot more buy pressure than prior cycles, and then that's what's going to give us that foundation before we can have a much more significant bull run. Because if we're comparing to the last cycle and what we're looking at inside of the 2017 cycle, notice how much bigger this 2017 bull run was compared to what we saw in the last cycle. Now, I think that there was a lot of factors. The last cycle had a lot of manipulation going on with high leverage people, obviously Sam Bankman-Fried, Terra Luna, Do Kwon, those people. When we're looking at that, we were also in the middle of a pandemic. So I just think that the amount of buy support taking place in that period was just not as significant. There was a lot more, confidence in the market going into that 2016 and 17 cycle, which I believe when we're looking at the cycle itself, look how much more consistent and methodical the uptrend is. We built a much more consistent, trending support before that final blow off top. Whereas if we're looking at the last cycle, we had this big sell-off. We went below the moving average. Anytime we were consolidating above this moving average, it showed that there was a lot of risk inside of the market. And anytime we were below it, it showed that there was not very much risk at all. But when we bottomed here at the beginning of 2019, we made this quick impulse and then this massive capitulation right back down, fully retraced the move, and then we had another very quick impulse and another big correction back down. So in my opinion, all this was a big corrective move, not, an impulsive one like what we saw right here. But when we're looking at what's taking place currently, looking at the end of the year bottom, 4 years from the last bottom, another 4 years from the last bottom of that, 8 years from that 2015 cycle, we've seen a lot more of a consistency in our uptrend behaving to what we saw in the first year of the 2016 bull run as well. Because when we're comparing these, we started this cycle at the very beginning of 2015. And so 1 year into it, was right here. This was all we had done in the beginning of that cycle. If we're comparing the two, we started this cycle pretty much at the beginning of 2023 right there, and 1 year into it takes us right here. It's pretty much the same sort of consistency we saw in that first cycle of 2016, and it's once again pointing to the conclusion that because we're building a much more stable foundation of support, I believe that this cycle is going to get a lot more impulsive, much more consistent with the likes of that 2016 and 17 bull run. Now, the next thing I really wanted to focus on was talking about why I believe that this is the institutional cycle. Now, what we've already seen since the Bitcoin ETF went live, we've seen all of these major investment banks and corporations have started accumulating, and what we're looking at here is even though the price is selling off, every single day that the price sells off, BlackRock, Fidelity, Bitwise, ARK, all of these different institutions are buying up these Bitcoin. And we've actually seen Franklin Templeton, which is the 20th biggest institutional corporation in the world, or at least in America, I'm not sure which one exactly, but it's actually came out and started tweeting about crypto stuff. So when I'm looking at this from a long-term basis, I think it's important that we're looking at the long-term cycles and the valuation of a market cycle long-term, because what we've seen is Bitcoin has been trending for what, 15 years now? And now that we're finally at the point where we're seeing institutions getting involved, accumulating crypto, now that they're making tweets about it, I believe that we've entered a new paradigm inside of these cycles. And when we're looking at this, Notice here when we're looking at the valuation of the market cycle, this is going to more or less explain where I think that we're at big picture. Now, in the early days of crypto, I believe that that was all of this. The smart money, this was the beginning of the crypto bull markets, 2011 to 2016 approximately, maybe 2015, depending on how you want to look at it. That was the smart money stealth phase. Once we started getting into the awareness phase, in my opinion, that was more of the last cycle. And it was really the beginning of the top of the 2018 bear market, because what we saw right here was the first CME futures trading market went live. And that was the exact day that Bitcoin topped. And then when the contract ended right here was pretty much the same day that Bitcoin bottomed in the bear market. So what we ended up seeing right there was pretty much the first institutional involvement, but it wasn't that much money. There wasn't that much involvement because Bitcoin's market cap wasn't worth very much at the time. Big companies like this could not accumulate crypto back then. But now, as we're seeing real institutional investors, real funds accumulating crypto with the ETF, hundreds of millions of dollars of value that is being accumulated in crypto that I think is only going to continue, especially if we see a correction up in here. So when we're looking at this, we're looking at the awareness phase, right? Now that Franklin Templeton and some of these institutions are now tweeting about crypto, they're informing the masses, they're telling everybody about how cool it is and how unique it is and all of the different technologies and what they do. And this is them, more or less bringing encouragement into the market. This is what always ends up taking place before this big sort of mania blow off top event. So I don't know what's taking place on a long-term cycle as much like looking at Bitcoin from the beginning to the end. But I wouldn't be surprised if we are, nearing that point of, the ending of these sort of parabolic bull runs. I don't think that there's much more that needs to happen. Once we get this big parabolic move, the institutions are going to use that to take profits. And that's why I think that, when they take profits, and we do one of these, you don't want to be holding the bag throughout that, because imagine if Bitcoin, makes a massive multi-year, 15 plus year cycle top, and it ends up correcting all the way back down to levels you just never imagined possible. I know that all of us crypto people have imagined Bitcoins just being worth so invaluable amounts of money that you can't even comprehend it. And I still think that that's the case, but there is going to be a point where, these parabolic bull runs end up stopping because institutions aren't just going to be stuck holding the bag forever. And crypto's not just going to infinitely go up to the moon. It's going to have a correction. And I think that we are nearing the point, considering the fact when we're looking at the long-term cycles, we are at the point of institutional adoption. And I think that this is what's really the final thing to take place before this big public mania phase that's going to make us all the most money. So anybody that's positioned right now, we are early. Anybody that's been here in crypto before the ETF, or maybe you just showed up, I still think that you're early, and we're about to make a lot of money over the next couple years. This is going to be the one cycle that we want to have the most preparation for. And I'm not saying that this is going to be the final cycle. I think that there is a 100% possibility that that could be the case before these guys end up taking profits. We could end up seeing another cycle after that. I'm not writing off those potentials either. At the end of the day, I really don't know. But what we're looking at here from a long-term basis, where crypto's at, how much further we still have to go. We know that looking from a long-term cycle, that as the institutions begin to inform the public, this is usually what takes place before this type of a blow-off top event. Now, as we're talking about this blow-off top event, I think it's important that we're talking about the 4-year cycles as well and how it all factors into the current cycle. We're also going to be looking at the Bitcoin halvings because, guys, we're less than 100 days or about 100 days away from that Bitcoin halving. Nobody really knows the exact day, but it's supposed to take some time in April. So I just drew a point here in mid-April, and that's where we're going to get our projected Bitcoin halving. So this one is going to be the next one in line. I've already gone and mapped out all of the prior ones. So what we're looking at here, guys, ever since 2015, and I just don't have any more data to pull from. So ever since 2015, every cycle low takes place 4 years from the last, right? And that's been the case every single one of these cycles. This one was 1,428 days from this low to this low. This low to this low was 1,428 days. And now we've began this new cycle. We're only a year into this new cycle, right? And I think it's important that you're understanding where we were at in those prior cycles at the same moment of time. So at each one of the Bitcoin halvings, the price of Bitcoin in 2015, or 2016, I should say, based off a Fibonacci standpoint, was right at that 618. We had just tagged it, and we had just sold back down below it at the time of the halving. So Bitcoin was pretty much sitting at the mid-range at that point of the cycle halving. Now, if we're coming over here and we're looking at what happened over in this most recent cycle, based off Fibonacci, we were sitting right here at this 382 fib. but we had already tagged the 618 in the first breakout, right? So we were at a little bit of a different point. This one had already gone through a correction, so did this cycle as well. But once again, guys, we were pretty much sitting somewhere in between the mid-cycle range of the high and the low of the bear market. So I think it's important that we're understanding each one of these cycles, we've been at a similar point in price. And so if we're comparing where we're at currently in this one, we just recently tagged the 618. That's the golden pocket. That's the golden ratio based off of Fibonacci. And oftentimes you do see corrections from that level. So as we've seen the ETF go live, as we've tagged this fib, as we've had this weekly rejection candle, I wouldn't be surprised if we did see a pullback in here. In fact, I want to see a pullback. I've been talking a lot recently about how the more pullbacks that we see, the more consistency that we build a sort of trend line and an ascending support like this, the more parabolic that the cycle impulse is going to be. And I think a lot of that has to do with when we're comparing some of these prior cycles. Notice how volatile this last cycle was and how much less profit there was, right? There was a lower high that took place in this cycle. But when we're comparing to 2017, what we ended up seeing was a lot more of a steady and gradual impulse that led to that final blow off top. The cycle right now is doing the same sort of thing. And as long as we continue to stick to that sort of trend, I think that this cycle is going to be the most profitable one that we've ever had. This is more along the lines of what I'm expecting. Even if we see a pullback back down to 34, 33, 35K, somewhere right around those areas, it's just going to be an opportunity to get in. When we're comparing the long-term cycle based off the valuation, notice here that once the institutions really get involved, this is what's known as the first sell-off in the bear trap. Do not be the least bit surprised if Bitcoin pulls back right here as we've got the approval of the ETF. It ends up being a sell the news type of event, and we get one little correction back down in here, and that's the final sort of sell-off before we get that next major move into new all-time highs. That's, in my opinion, what will take place. I do want to see us come back down and retest this main trend line of support. If we're comparing prior cycles, the best cycle we've ever seen was 2017, and we really consolidated on this ascending support before that blow off top. We did the same thing in the last cycle. The only difference was we had the COVID capitulation that temporarily broke below that. But we can see that we still ended up recapturing that same trend line after we ended up bouncing from that capitulation. So when we're looking at our current cycle, I think we could end up coming back down here in the short term, retesting this trend line before we build that next sort of leg up. Our next Bitcoin halving is coming up soon. Don't be surprised if that ends up being similar to how we started to kind of bottom and recapture that trend line right at the point of that halving. I do think that, this is going to be the most profitable cycle to be a part of. So if you do get the opportunity to buy any sort of correction, even if you're down in some profit, even if you bought something at a local tops at this point of the cycle are going to be massively dwarfed when we're talking about how much upside potential this cycle is going to truly bring. Now, we've talked a lot about the Bitcoin cycles. I wanted to talk about what the altcoins are going to be doing in this time, because I think that this one is going to be the most profitable altcoin cycle that we've ever seen. And with the institutional cycle, as they bring all of the new retail investors coming into the market for exit liquidity, I believe that the retail involvement will be dominated inside of the altcoin market, just as the way it's always been. Now, noticing here, Bitcoin dominance has been in an all-time downtrend since the very beginning of this cycle. Ever since new altcoins got created, they've only continued to eat at the Bitcoin dominance, and it's lost dominance over the altcoins over time. Now, in the cycle of 2017, we saw this very massive capitulation that took place where Bitcoin dominance sold off like 80%, 70 or 80%. From a high being 96% all the way down to 36% down in here. So we had this massive capitulation that took place here, and that was why we saw the most profitable altcoin cycle ever. Now, once the cycle topped right here, Bitcoin dominance never ended up making a lower low from that point. Even when we're comparing right here going into our last cycle, when Bitcoin made this capitulation, this was where we had DeFi summer, all of the main profits in Dogecoin rolled in. That was where Elon was really pumping a lot of stuff. We saw all of the dog coins take off in a big way. That was our mania in the last cycle, but we never made a lower low past our peak low of that bear market of 2018. And I think that that's the most important thing that we're factoring in. Our entire last cycle was corrective, right? This is a lower low. This is a lower high. This is a higher low. This is another lower high, and I believe that this next cycle is going to be the first lower low in this market since the 2017 cycle right here. That is why we are going to see so much more profit in this cycle than ever before, is because this will be the first time that the Bitcoin dominance has fallen to a new all-time low since that 2017 bull run. So once again, guys, when we were looking at this comparison, I said how this looks corrective to me. It looks like a lower high. It looks like a corrective cycle rather than being a true market cycle like this. And I think that right now, with the way our cycle is developing, with what we're seeing inside of the charts, you know, if this entire move was corrective, and it was also showing the same resemblance on the rolling Sharpe ratio, as this cycle is looking a lot more like this on this same graph, and the Bitcoin dominance is also looking a lot more like that 2017 cycle, I don't think it can be ignored what we're about to experience inside of these altcoins. Now, the final chart I have to share with you guys today is going to be mapping out one of the fractals that I noticed inside of the altcoin total market cap. And I think that this one is going to be super important for understanding where we have to go and why I think that the charts are really telling us this cycle is going to be so much more parabolic in nature. Now, right off the bat, guys, if we're comparing these cycles, we need to go back to the very first one of the altcoins that we ever had. And that was what we saw right over in here. Now, once we made this first cycle, we ended up topping. We made this descending resistance until we broke out of that with this move right here. And then we kind of consolidated sideways here before going into that new all-time high breakout and then that 2017 bull run. Now, what I found so interesting is when we're comparing this cycle to this cycle, it's pretty much exactly the same. Notice how once we made the all-time high and we had this bear market, we followed the same sort of trend where we made a descending resistance. Once we broke out of that, the breakout was very much the same, being this sort of lower high right here. It was the same type of move. Then we fell all the way back down to trending support. Same thing happened here. We have this little bull trap. And then we have this final sort of sell-off right here. We had the COVID capitulation, so it was a little bit more volatile in comparison. But once again, it's the same sort of fractal. Now, what I find so interesting is the way that this first breakout and leg up works. It looks exactly the same as what we actually saw in the beginning of that 2016 bull market. As we're making this comparison, this was the first leg up to begin the 2016 cycle. This was where Ethereum first got added to exchanges and made its thing. And then this, once we retested those prior all-time highs as new support, that was what we got before the 2017 bull market. What our entire current consolidation and last bear market looks like, going even back into the last bull market, it looks exactly the same as this setup right here, in the same way that this cycle looks the same as this cycle right here. All of these are following the same sort of fractals, and I find it really interesting considering what comes next is another one of these 2017 type of bull markets, which is more or less what I've been preaching for the longest amount of time now, is that this is what we would end up seeing going into this next bull market. Now, I can't tell you guys exactly how high we're going to go. I don't even know. I don't even think that it would do quite this parabolic of a move. We got to be realistic in understanding that the amount of market cap in today's world is much higher. But if we're going to see an institutional cycle where all of them flock to buy at the same time, which is more or less what we're already seeing now in the shifting point of that, do not be the least bit surprised if the amount of money that comes into this market ends up, surprising every single person here. We want to just do our part by being prepared before that. When all of our cycles are lining up and showing that we're about to see one of the most profitable, if not the most profitable cycle of all time, all we really want to be doing is focus on the long term, focus on holding the rest of this cycle, because I think that that's going to give us the best strategic advantage over the rest of the market, regardless of what your positions are. There's going to be so much upside to be made. I've been able to do so much for myself with my own portfolio. I've been able to help out my friends and family, and I'm so much more looking forward to this cycle in comparison to anything we've ever seen, because I know for a fact that this one is going to be the one that everybody that has preparation, that has positions now, is going to make so much profit that you really do have the opportunity to change your lives. If you focus on the long term, you don't get shaken out by these sell-offs, especially if we end up having some sort of short-term bear trap like this, where Bitcoin pulls back to like mid 35,000. don't be caught off guard by that, and understand the long term is what's going to be taking place like this, because understanding the long term allows us to calm those emotions. It allows us to look forward to what's going to be coming ahead, and I think that that is the most important thing when we're looking at the fundamentals of crypto. How now we have institutions talking about crypto, making tweets about it, informing the public about it for the first time. This is literally what you see before that final blow off top that takes place. Now, I'm not saying that this is the end all do all for the cycles. I still think that we could have another one to follow, but I do think that if you want to have the most opportunity for profit potential and life-changing wealth, this is the cycle you want to have the preparation in play for. So guys, if you found value in this, do me a favor by leaving a like, comment, and subscribing. Hit the notification bell so you don't miss out on any of these videos. If you guys do want to end up seeing how I'm investing, what altcoins I may end up buying if we end up dipping here, anything that I'm doing with my personal portfolio long term, even if I end up moving outside of crypto, you guys got to sign up on my website to join my Discord server. On my website, you're going to be able to get total access to that private group on Discord. That's where I post everything I'm doing with my portfolio. So if you guys do want to get access to that, links are in the description to go ahead and find my website. Thank you guys so much for tuning in, all of the support you've given me. I wanted to break down the total cycles because I really think that this one is going to help simplify some of your questions, comments, and concerns moving forward over the next few years. Thank you guys so much. And with that being said, I'll catch you in the next one. As always, peace out.